Okay, so welcome back to the podcast, everyone. Today's guest is Andrea Casson Galiano in the Georgia mountains, and she has a real estate firm with over 3,000 units and 100,000 square feet. So let's jump right into the questions. Andrea, how did you first get into real estate? What inspired you, and what was the aha moment that made you invest in multifamily specifically?
Thank you for having me here today. And I remember it vividly. My husband signed us up for Grant Cardone's first real estate summit in the summer of 2021. And as we drove down, we listened to Rich Dad, Poor Dad on Audible. And I
Oh,
said to my husband, I said, I get the math of commercial real estate. It makes a lot of sense, and we definitely should invest in it.
yep.
But I think going to this summit, it's going to be like Dragon Con, and we're going to be in a room full of weirdos, and we're going to get COVID, and we're never going to come back.
Hmm.
All of those things happened,
Yeah,
but we did start investing in multifamily because the multi-door approach just makes so much sense that
right.
when even if you don't have full occupancy, you still can cover your mortgage and your expenses.
Okay, okay. Sounds like well, I'm glad you went and I'm glad everything turned out okay. And COVID. So what year was that when then you went? 2020?
That's 2021, the second
2021.
round of COVID.
Okay, okay. All right. So can you walk us through your first deal where you were the lead sponsor?
Yes, I'm still living it. It was Aero Self Storage, and I was on a small team, and we looked at 500 deals. We did
Ooh.
quick underwriting for over 500 deals, and this was the only one that made sense. I wasn't specifically looking for self storage. We looked at about 400 multifamily and 100 storage, but this storage one made so much sense.
Yep.
However, we had a really difficult seller, and it took over a year to get to close.
Oh
But
my
I found
goodness.
the deal. I negotiated the deal, I secured the debt, and I was the highest capital raiser. I'm now the lead asset manager. So I learned an enormous amount of things in this one deal, a lot more than when you just raise capital for a deal.
For sure, for sure, for sure. Okay. And so how has your strategy changed since that first deal? So, for example, maybe deal criteria. Well, let's stick to that first. So, just deal criteria. Has your strategy changed since that first deal?
My strategy has evolved.
Okay.
Before, I was only looking at syndications, and now I'm looking at syndications and JVs. So I'm looking at
Okay.
a smaller end of the market and also a medium part of the market. And I have expanded my asset classes that I look at because after going through that deal, I realize it's the deal that matters, not as much
Yes.
the asset class. You can
Yep.
find something that makes sense and you have a strong team, you can make it work. You just need to find someone with experience in that asset class.
Yep. Okay. I definitely agree with that. I think as long as the numbers pencil out, go for it. And if you can partner up with someone who has experience in that asset, then everything should work out just fine. So how about your risk tolerance? Has that shifted, or have there been any changes there since the first deal?
It's definitely gone way up. I'm looking at more challenging deals because I've learned there's ways you can make it work. Certainly the underwriting has to be there. That's not what I'm talking about.
Yep.
But if there's something you don't like about the deal, there's ways to work around it. So I'm absolutely pursuing deals much more aggressively now. It's what they say. Once you have your first one done, it opens your eyes to what the possibilities are.
Yeah, yeah, okay, okay. I definitely think we're on the same page there. All right. And how about speaking about that, okay, so like mindset shifts, right? I think, for the first deal you looked at 500 different deals. Only one of them kind of made sense, and luckily you got that one. But some people look at even more deals before they get their first one, and a lot of people maybe they might give up because, or I don't know, they're looking at too many deals, but they can't find the one that works. So have you had any mindset shifts since the first deal then?
I think I'm more open to joining other teams with deals. And it
Yep.
wasn't that I wasn't open to before, I just didn't think about it. I kept thinking I had to find a deal. And
Right.
I realized now I don't have to find the deal. I have to find a team with the deal or a team that has deal flow. So it's expanded my mind and the possibilities in several ways.
Okay, good to hear, good to hear. All right, so let's move on to a different section now, tips and pitfalls, because I think that for people who are watching this, if they want to get into the space, they can learn from us. Um do you have, so I know you said that maybe you realize that you don't have to be the one finding the deals, but do you have any tips and pitfalls around finding deals?
It takes a lot of time, and you do need to be detail oriented, and you need to be open minded. And another lesson I learned was, if the underwriting doesn't work at first, don't just toss away the deal.
Okay.
Call the broker and see what flexibility there is. That's something I'm doing much more of now. And
Yeah.
I'll email the broker and say, this deal didn't work in my underwriting. The NOI did not cover the debt. Are there opportunities here? Are they working to increase the NOI, maybe with higher rents? Are they open to seller financing? Or is there something else we can work on together to make this deal work? And I've
Mm-hmm.
been surprised at how flexible brokers have become.
Uh-huh. Okay. I probably need to take that in take that advice because I just threw away a deal this weekend. I was like, no, I can't. I can't. My price is not nothing there to what you want. So maybe I should go back and be like, well, maybe is there anything we can change? Maybe I'll I better do that on Monday. Okay.
You
And
know,
how, sorry. Yeah, go ahead.
I just had a storage deal and the asking price was 4.4 million.
Uh-huh.
And I worked really closely with the broker. I shared my underwriting. I said, look, I understand why the seller wants that money. It just doesn't make sense for a syndication. I'm sorry. I wish we could work together. And
Yep.
she came back 2 months. She came back a month later with new debt terms that made the deal look better, but it
Yep.
still didn't work. She came back a month better later and said, the seller will take anything over 3 million. And now the deal
Wow.
works.
Okay, okay. So
Hmm.
from four, you said from 4.4 all the way down to 3.
Hmm.
Okay, okay. So that's
Hmm.
kind of similar. That's kind of similar to the deal I was looking at, and that's why I thought, oh, I'm out because I thought I was way too off of their asking price. But let's see. I'll reach back out to the broker and kind of see if they're flexible there. All right. And how about like tips and pitfalls about operating or executing on your deal and on your plan after you get the asset?
Yeah, I started out in real estate with 6 LP investments, and
Okay.
I watched those for a year while I was doing the $500 underwriting looking for a deal. And I learned a lot about how to operate a deal, but mostly how to not operate a deal.
Uh-huh.
And I was stunned at how little communication there was with investors. These people had taken 50, 75, $100,000 of my money, and I wasn't even hearing from them monthly. And I realized that that's totally unacceptable when you have an investor's money.
Yep.
So that's something I made a point of. And we communicate monthly. We have quarterly webinars for our investors, and we're always open to answering questions for them because I think that is so important. Now, that's on the investor side.
Mm-hmm.
On the execution side, I'm surprised at how many operators have asset management meetings once a month and ask the property manager a few questions, and that's all they do. To me, that is also unacceptable.
Yep.
I check my operating software every day to see who's moved in, who's moved out, what have we collected that day. I check the bank statement, the bank account every day to match up what I'm
Yeah.
seeing in the operating software and what gets deposited. And I question every single expense.
Yeah.
I want to know what every line item is. So we manage our properties very tightly, and consequently, we are 10% under our expenses from our underwriting because we
Oh,
pay so much attention to it.
perfect, perfect. Yeah, I think investors would love to hear what you just said, that you're totally on top of things, you're checking everything, daily, and you're on top of everything. That's definitely good. And I think, yeah, less than a month. I mean, if they didn't communicate with you in those LPDs, LP deals, frequently, I think that's a serious red flag. And I hope that at least the deals worked out fine. Then it's okay. But if there's problems and you're not communicating, it's 10 times worse. So,
You're
yeah.
exactly, that's what it was. The two deals where I didn't hear from the syndicators, the deals were having problems. And of course, you figured that, right? Like you
Oh,
said, you
no, no,
figure that
no.
out. You're
Yeah.
okay. Why aren't they sending me something? And
I
those
think
those
that's,
deals,
yeah, that's the time when you need to step it up and you need to communicate even more, to let them know that what you're trying to do, what you're trying to do to
that's
turn
right.
things around and so on. So that's, yeah. I'm glad that you learned that, and I'm glad that you've taken that to heart and you're now applying that to your own deal. So I think that that will give investors a lot of confidence in working with you. So good, good, good. Hey, if you've got a real estate deal, a problem, or even just a question, we want to hear about it. Doesn't matter if it's big, small, complicated, ugly, or somewhere in between. If it's a good deal, we're absolutely interested. Period. And if you've got capital, you need to put to work in solid real estate opportunities. We've got those too. Either way, let's talk. Here's how this works. We always need more deals. We always need more capital. And we always find a way to make it happen. No games, no runaround. If we can't work together directly, we'll hand deliver you to someone who can. Okay, and well, how about exiting? I'm not sure if you've gone like full cycle on any deals just yet, but do you have any maybe tips and pitfalls there?
I do not have experience exiting yet. Like everyone, we're hoping interest rates go down so that we can refinance and return some capital to investors.
Yep.
Unfortunately, interest rates haven't cooperated, but that's something we'll certainly keep our eye on. I check the treasuries at least once a week, usually
Okay.
2 or 3 times a week,
Okay.
seeing the
Yeah.
trends.
Hopefully interest rates will, dive down a bit so that you have opportunities to refinance and so on. Okay. So like a quick bonus question. Um, what do you think is the most effective networking strategy in real estate?
What I try to do is find the person standing alone at an in-person event. And
Hmm.
it's obvious, but in-person networking is so much more effective and efficient than online networking. Sometimes you
Yeah.
don't have a choice.
Yep. Yep. Yep.
Obviously, and any networking is better than no networking. But if you're in person, look around the room and see the person that's by themselves. And I just walk up to them and say, "Hey, I don't think we've met yet. My name is Andrea. I have a real estate investment firm. Uh, how did you come to this event? What is your interest in real estate?" And it just flows from there. And I try to obviously listen to what they say. We were given 2 ears and one mouth.
Right.
But I try to repeat what they say and work it into the conversation. And as I close a conversation, I say, "Well, thanks for sharing that tip on such and such. I'm going to use that. And it was great to meet you." So sometimes exiting a network is even harder than making the introduction.
Yeah, yeah, yeah. Okay. So like you mentioned something just now that I think is very interesting because I'm not sure if you read the book. I think it's called like Never Split the Difference by Chris Voss. But he mentioned something similar to what you just said, like kind of like I think he calls it mirroring. And you kind of like repeat things that the person says and it helps them, number one, maybe it helps the conversation go better and it also helps the person have a good impression of you. So anyway, okay, fair enough. Good. Let's move on to
I do
the
read the book, but
okay.
it also helps me remember the person and remember the conversation. If because when you say something out loud or
Yeah.
you write
Your
something
brain will pick it up.
down,
Yes,
it's
yes.
when you remember it. And you can't, be sitting there with a pen when you're talking to someone. So the
Uh-huh.
repeat strategy helps my memory.
Okay, okay, cool, cool, great. So yeah, let's move on to the rapid fire round. Just don't think too much, just say what comes to mind, regardless of what it is. We don't sense anything on this podcast, so whatever, just speak your mind. And I'll just throw my questions out there and you just do your best to answer them with whatever comes to mind. Okay, so the first question is what was your worst tenant story?
Oh, this one's easy. I'm a GP on a multifamily property in Las Vegas. And what happens in Las Vegas stays in Vegas, but in this case, I'm going to tell you this story. The property is downtown, so we get some very interesting tenants. And
Yep.
there was a woman, and a lot of the tenants had called the police, calling to complain because she'd been arguing with her boyfriend. And, it got really bad one night, and they called the police, and the police, went in and arrested her, and she was half naked,
Oh,
and they brought her out anyways. They didn't give her a chance to put a shirt on, and all the other tenants are using their phone
oh
videotaping
no.
it and sent us the video of this whole event. Needless to say, we evicted her. Vegas and Nevada have very easy eviction laws. You just file something and 2 weeks later it's done. So that was
Yep.
the easy process. And we had to have a little pizza party to try to smooth things over with the tenant. The other tenants were understandable. They were happy that she was gone, but
Yeah.
yeah, that was a horrific moment.
Okay, okay. Well, yeah, I'm glad that that happened in Nevada so that you can, take care of the situation quickly versus, somewhere else like Seattle. Okay, let me not pick in any places, but yeah, yeah,
Right.
okay. All right. How about your favorite expense saving hack?
Well, as I said, I check every line item
Hmm.
in the bank. And when we inherited our Aero storage property, I called Comcast, who's notorious for negotiating, and I said, we need to lower our rent.
Yep.
And I was looking at the bill, and I said, what is this cable TV thing? And they said, oh, you have cable TV in your office. I was like,
Oh my
no, we
goodness.
don't.
We don't.
We don't even have. We were paying $75 a month for cable TV in a
Uh-huh.
business office.
Yeah.
Needless to say, we canceled it right away. But you do have to look at all of your bills because you never know what's on there unless you examine them
Yep.
line by line. And it's time consuming and you've got to follow up with the phone calls. But if you've got investor money, you have that obligation to do that for them.
Yeah, for sure. I think you definitely have the responsibility to, look at things carefully and see where you can, save money for your investors. Okay. How about advice? Okay, there's a lot of real estate advice floating around. I can say some, but I don't want to put any ideas in your head. So, but what do you think is some of the most overrated advice in real estate?
Most definitely, doing a big deal is as easy as doing a small deal. I've done
Okay.
both.
Yeah.
And that's just not at all true. The bigger the deal, the more capital you have to raise. And no matter how many people you recruit, that's you still have to raise more capital, and then you have to have roles for those people on your asset management team. Now, I worked at AT&T for 25 years. I'm used to managing large teams, so I'm very comfortable with it. But
Yep.
with someone who doesn't have people management experience, what do you do with those 6, 8 people that you had raised capital to fill the gap, and now you've got to go find roles on asset management.
Hmm.
I like smaller deals. Now, of course, there's economies of scale with bigger deals,
Right.
but there's ways to handle efficiencies with the smaller deals, and smaller deals are fewer problems. It just is. It just is.
Okay. And then a quick follow-up. Any underrated advice or any good advice in terms of real estate that you can think of?
Capital raising is a lot harder than people make it out to be. Again, you're taking people's money, and often
Hmm.
it's from their retirement account that they've worked to build up, and they are trusting you. And you find you not only have to educate people about commercial real estate,
Hmm.
you also have to educate them how to make the investment.
Right.
So there's a lot of commitment to someone when you start working with them on this. Most people understand a VRBO, they have a short-term rental, they have a single family rental, they get that. But
Yep.
making the transition to a multi-unit property that's commercial, with different debt, different metrics, different everything, different language,
Yep.
it takes a lot of investment in time. And I think a lot of people underestimate that.
Okay. Yeah. I think I might have been one of those people initially that thought, oh, it's easy to just. Okay. 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 So, in our group, we like to talk a lot about, superpowers or, yeah, superpowers is what we call it. So, do you have anything like what's your one unfair advantage?
My unfair advantage is my education.
Hmm.
I know I was raised privileged and that my family paid for my undergrad and allowed me to get a business degree. And that allowed me to go to graduate school debt free. Now, I did
Yo,
pay for
okay.
graduate school. So I have a lot of education, and I use that education at my job at AT&T. And T. And I've leveraged not just the education, but the experience of AT&T in my real estate. And well, how do you do that? And you'd be surprised how many skills are transferable. I was in a program management office, and program management and asset management are basically the same thing. You're
Yep.
managing a big project, you're managing people. You got to get everybody to the finish line at the same time, right? You got to get the capital raise done by close. You got to get the seller there, the attorney there,
Yep.
managing multiple work streams. I was able to leverage that. But if I hadn't had that education, I wouldn't have gotten that job and I wouldn't have been able to do this. So I know I'm very, very lucky.
Okay. So yeah, sounds like there's a lot of overlap there. So that's good. Okay. Oh, sorry. Yeah. I don't like to use the word regret whatsoever, but if you can go back, is there anything that you would do differently?
I would have started this so much earlier. I would have started doing it on the side while I was working at AT&T.
Yeah.
And even after I retired from AT&T, I went 2 years and did some other stuff. And I wish I'd started this earlier. I think it's fantastic how many young people are starting this in their 20s and 30s, even 40s.
Yeah.
Getting a leg up and learning this industry because there is so much opportunity for wealth appreciation
Hmm.
if you have the time.
Yeah. Okay. Then this is definitely something I've heard from so many people. Start early. I wish I started earlier. Wish I started earlier. I also wish I started earlier, but whatever. We're here today, so let's just move forward from where we are. All right. And so do you have like what's your best advice for investors? Oh,
Ask a
sorry, sorry,
lot of
sorry, sorry.
questions.
Let's say
Oh,
new investors. New investors. Let's make it a little bit easier. I think. Yeah. Okay. Sorry. Go ahead.
ask a ton of questions. Don't be
Hmm.
afraid to ask questions. And if
Yep.
if a GP or the sponsor won't answer a question or answers it kind of cagey, that's a huge red flag. I
Okay.
have a Word document with over 100 questions for an LP to ask a GP, and I send it to my investors. Now, you
Uh-huh.
can't ask 100 questions. Nobody has time for 100 questions. But what I tell LPs to do is look at the questions that are most important to you and
Mm-hmm.
ask those. Ask about the team and always ask to see the underwriting.
Yeah. Okay. I like that. I like that. I think I'm gonna steal that and send it to LPs from now on. Okay. Yeah, I think that was maybe the final question for the rapid fire round. I think you've done quite well. So anything else that I didn't maybe I didn't ask you that you think that the audience might have wanted me to ask you or you wished I asked?
We didn't get to talk about asset classes, and
Okay.
I'm unusual in that I don't pursue asset classes that have residents. I
Mm,
go
okay.
after asset classes with tenants,
Okay.
right? So multifamily has residents, people are living there, that's their home. And I invest my own IRA money in multifamily because I believe strongly in it.
Mm-hmm.
As an operator, I don't want to have residents.
Uh-huh.
After the Vegas property and dealing with the prostitutes and the police phone calls,
Yep.
I prefer storage and industrial flex
Mm-hmm.
because there are tenants but not residents. And
Right.
industrial flex is even more appealing because your tenants are businesses. And
Yes.
so they
Uh-huh.
buy what they need. They're not fickle like consumers. So I
Yep.
am migrating more to a business to business model. It's
Okay,
another
okay.
lesson that
It
I've
makes sense.
learned.
It makes sense. It makes sense. Maybe multifamily, with residents is not for everyone. I'm okay with that asset class, but not. I don't understand that not everyone is. I think yeah, you're right. Self storage and so on. There's a lot less hassle there. So
Yeah.
you maybe you're onto something. You're onto something. Okay. So is there anything? Are there any projects that you're excited about that you want to share, or any resources, or if someone wants to reach out to you, maybe or someone listen to this and they think, oh, Andrea sounds like the person I want to invest with. How can someone reach out to you? How can they get in touch with you?
Well, the easiest way is Andrea at brasstowncapital.com. But if you search for Andrea Casson on Facebook or Instagram, you can message me through there. Also on LinkedIn. I check all the platforms all the time. So I would welcome anyone reaching out and I'd be happy to speak with them, particularly about a dirty business like self-storage industrial flex.
Okay, okay. All right. Well, so thank you so much for joining us on the podcast today. I think you've provided a lot of value to anyone who is listening, and I think I hope to have you back later on, maybe like to see how your deals are progressing, like a year later or whatever else. And yeah, so like I said, thank you very much for being here today. Any final thoughts?
Thank you for having me, and I'd come back anytime. You are a delight.
Okay, perfect.